All right, today I'm going to take a look at the stock market. So there is the possibility that we've completed our intermediate cycle low here. Now there are a couple of flies in the ointment. So first off, anyway, it looked like we might have had that intermediate cycle low right here. We did get a nice breadth thrust. The McClellan oscillator surged all the way up to plus 100. And then we got into this sideways churn that, in real time, it kind of looked like this was probably a bull flag that was going to eventually break higher. But instead it broke to the downside. And I've noted this before. This break to the downside initiated what I think is a bloodbath phase. And I've covered that before. Not always, but most of the time, probably 80-90% of the time, they last about 5 to 7 days, and then that's about what it takes to exhaust all of the selling, and then there's nobody left to sell, and then the market goes back up, and you get a final intermediate cycle low. And then in stocks, you tend to get this panic covering, which produces pretty strong rally. So stocks tend to V out of these intermediate bottoms, whereas gold will very often just churn sideways and waste an entire daily cycle before it can really get any momentum. And that kind of looks like what gold is doing. I warned people that was likely to happen. But for stocks anyway, we've got a swing, and we're getting a pretty good rally today. We'll need a follow through to confirm this, and by follow through I mean we've got about a 2% rally today. We're going to need another follow through day of at least 1.5%. Preferably I'd like to see a 2 or 3% rally day somewhere in here, and that would probably confirm that this bloodbath phase, which did end on day 7 as of right now anyway, was the bottom. Now, like I said, a couple flies in the ointment. For one, this bottomed on day 19. That's pretty short. Most daily cycles take about 35 to 40 days to run to completion. So we're about almost 15 days short of a normal cycle. However, there are some extenuating characteristics here, in that this daily cycle that started here ran really long, 60 days. So very often a long cycle is followed by a short cycle, and then that kind of balances out the entire intermediate cycle. So even though this is a little bit short, it could still be a final daily cycle low and a final intermediate cycle low, because we're kind of expecting a short cycle here to balance out this long cycle. Now, I covered this in the previous video on energy stocks. I pointed out just how far energy stocks have gotten stretched above the long-term mean, and by that I was talking about the 200-day moving average. In stocks, it's the inverse. They're stretched too far below the 10-day or the 200-day moving average, and so we need to fill in some or a lot of this gap. And I'm like 99% sure we're going to go above this peak. Maybe we come up here. We might even come up and test this 200-day moving average. We've got some extreme bearish sentiment that is built up, and in order to have another leg down, we're probably going to need to erase that sentiment, convince everybody that this was the bottom, and that we aren't in fact in a bear market, and then that would set the stage for this to roll over and give us another leg down. But we'll cross that bridge when we come to it. But right now, just too much white space between price down here and this 200-day moving average, and we need a regression event to shrink some or all of that gap before we can start the next leg down. So I'm going to give this the benefit of the doubt. I think this is going to turn out to just be a short daily cycle, and now we're going to transition into the advancing phase of a new intermediate cycle. I think it's probably going to be a bear market rally, but it could last 8 to 10 weeks before it rolls over. So this could go on for a considerable amount of time, and it probably will need to go on for a considerable amount of time to wash out that bearish sentiment and then reset the market for another leg down.